The topics for today's video include what is technical analysis, the aim of technical analysis, and the technical analyst and the technical trader. So, what is technical analysis? Now, there's a bit of text to read through here, so I'm going to read through it, but you may want to just read along with me. So, technical analysis, also known as charting, is the study of historical price action, specifically price, pattern, time, and volume, to determine how the forces of supply and demand are affecting price. Technical analysis is based on the belief that price discounts everything, that price moves in trends, that history rhymes. Now, notice here I've put history rhymes because in technical analysis, history doesn't repeat. No two situations are alike, but history certainly rhymes. And that everything known in the market, including all market variables, are reflected in price and volume as depicted on a price chart. Technical analysis as a methodology employs the use of various types of charts, patterns, support and resistance, indicators, and other tools to form a view of the most likely direction of price based on the current state of the market. Now, notice here that I've put here, we are trying to form a view, but that view is based entirely on the current state of the market. So where the market's been, but also where it's at now. Now, a lot of people miss that important point. So technical analysis is a rich and diverse study and is an individual's interpretation of price action. It is therefore considered more an art rather than science. So what is the aim of technical analysis? So the aim of technical analysis is to identify supply and demand dynamics using market structure, trends, patterns and trading signals, and use them to decide when and at what price to enter or exit the market with a high level of probability. So does this mean that the technical analysts ignore fundamental analysis? Not at all. The technical analysts will also keep up to date with fundamental factors that could affect the balance of supply and demand. So this is important to note here. So just a little finishing statement here, that competence in technical analysis is a learned skill that requires sufficient time to achieve and is best applied using techniques that resonate with an individual's personality rather than a blanket approach. So let's just have a think about that for just a quick moment. The point I'm trying to make here is that technical analysis is individual to everybody. So that doesn't mean that different technical analysts won't come up with the same conclusion, but how they go about it, they may use slightly different methods to come up with the same conclusion. But also here, when I say about a blanket approach, that doesn't mean that the technical analyst uses every tool available, because that just doesn't work, and we just simply don't have enough time. But over time, there'll be techniques that will resonate with individuals, and that's what you're best sticking with. Okay, so the technical analyst and the technical trader. So there is a big difference between the technical analyst and the technical trader. So we need to make a couple of important distinctions here. The technical analyst forms an opinion about the future direction based upon current price action. All right, so here we are again, future direction based on current price action, but taking the lead from past price action, of course. Whereas the technical trader executes the trading strategies based upon their analysis of the markets. That doesn't mean that the technical trader won't utilize the service of a technical analyst to form a view for them. It just means that the technical trader will execute their strategies based on their analysis, which includes perhaps a technical analysis of the markets. So the other skills required, but not limited to, are, and this is for the technical trader, so we've got two different individuals here. Money management, so the technical trader needs other skills. One of those, money management. The second is process management. So managing his processes, how he goes about doing his tasks. Trading psychology. And he also needs a review, a feedback loop, and also growth procedures. So you can see the two differences here. So in summary, what have we learned? We've learned what is technical analysis. We've learnt the aim of technical analysis. We've had a brief look at the difference between the technical analyst and the technical trader. So, in our next video, we're going to look at the principles and realities of markets. So thanks for watching. I look forward to seeing you in the next video.